Recessions are, by their very nature, periods of contraction, of tightening belts, trimming fat, and scrutinizing every dollar spent. It is during these lean times that households and individuals engage in an austerity calculus, asking themselves, what can I live without? And too often, insurance becomes the first casualty of this process. A monthly premium can look like an avoidable luxury. I'm healthy, one thinks. I'm young. I've never had a serious accident. And so, the insurance policy is cancelled, the coverage is dropped, and the safety net, so painstakingly woven, is unraveled thread by thread. But this, in truth, is a grave miscalculation. To abandon your insurance during a recession is to ignore the foundational logic of what insurance is. Protection, not in abundance, but in adversity. The essence of insurance is not merely to buffer against risk in a hypothetical future. It is to transfer catastrophic risk to a mechanism designed to absorb it, precisely when you are least able to afford its consequences. Let us begin with one of the most fundamental forms of coverage, life insurance. When markets fall, investments flounder, and jobs become scarce, families depend even more on their breadwinners. If you are the principal earner, your life insurance is not simply a policy. It is a contract that assures continuity for those who rely on you. The tragic irony of recessionary cuts is that financial vulnerability rises at the same moment that protection is abandoned. Consider a young father who decided to lapse his life insurance policy to save a few $1,000s a year during the 2008 financial crisis. He had no underlying health issues, no vices, no reasons for concern, but he died in a car accident on the way home from work one rainy November evening. Without that policy, his wife was left with 2 children, a mortgage, and a single income insufficient to sustain them. Their apartment was sold. The children changed schools. The short-term savings turned into long-term collapse. Had the policy remained intact, a 7-figure payout could have preserved the family's standard of living for years. The cost of keeping it? Less than the family's monthly utility bill. Now consider health insurance. Hong Kong, with its dual public-private healthcare system, may appear to provide some form of safety net. But access to quality, timely care in the private sector is contingent upon the ability to pay for it. During an economic downturn, many defer non-urgent medical treatment, but illness does not operate on a timetable of convenience. And when disease does strike, the financial burden can be immediate and immense. Take the example of a small business owner in Quarry Bay who cancelled his health plan to preserve cash flow during the COVID-induced downturn. A few months later, he was diagnosed with a severe gastrointestinal condition requiring surgery and ongoing treatment. His choices? Wait indefinitely in the public system or pay upwards of $300,000 out of pocket in the private sector. He chose the latter, and the debt incurred forced the liquidation of his business. The health crisis didn't just impact his well-being, it eliminated his livelihood. Had he kept his insurance, he would have paid a deductible of $10,000, and the remainder would have been covered. That's the difference insurance makes, not just in recovery, but in survival. And then there is critical illness insurance, perhaps the most misunderstood and underappreciated line of protection. Critical illness cover pays out a lump sum upon diagnosis of serious, life-threatening conditions, cancer, stroke, heart attack, and more. It is not tied to the cost of treatment. Rather, it is designed to compensate for the immense economic shock these conditions impose. Time off work, changes to lifestyle, medical travel, home renovations, long-term care. During a recession, people are already financially exposed. Job security is tenuous, savings are stretched thin. If a major illness strikes, it can swiftly unravel everything you've built. The financial architecture of your life, mortgage, tuition, retirement planning, can collapse under the weight of unexpected costs and reduced income. A 42-year-old regional marketing executive in Stanley faced this reality. She had cancelled her critical illness policy in 2020, deciding she could reinstate it when her financial situation improved. She was diagnosed with early-stage breast cancer in early 2021. While her medical prognosis was good, her finances were not. Time away from work, supplementary therapies, and the psychological toll of the illness led to months of unpaid leave, which her employer could no longer sustain. She exhausted her savings within 6 months. Had she retained her coverage, she would have received a lump sum of $500,000, enough to support her full recovery, pay for holistic treatments and re-enter the workforce on her own terms. Instead, she recovered in financial ruin. And finally, let us not forget the utility of personal accident insurance. The common misconception is that this type of coverage is only necessary for those engaged in high-risk activities. In reality, accidents are common. They strike the young, the old, the healthy, the cautious, and the reckless alike. They are blind to income level, occupation, and economic cycle. A delivery driver in Kowloon, supplementing his income with part-time work during the downturn, suffered a fall while carrying goods up a stairwell. The injuries were not life-threatening, but they were disabling. A fractured hip, torn ligaments, 3 months of immobilization. With no accident insurance, he lost his ability to work and his sole source of income. Had he purchased a personal accident policy, he would have received a weekly income benefit throughout his recovery, plus coverage for medical expenses and physiotherapy. This is the crux of it all. Recessions are precisely the time when the unexpected becomes unaffordable. To let go of insurance when your financial resilience is already compromised is to take a gamble where the stakes are your life, your health, and your future. Insurance is not just a line item, it is a firewall. It is a declaration that your plans, your family, your health, and your dignity are worth preserving, especially when the economy is not in your favor. In times of abundance, you may never need it. But in times of scarcity, you may not survive without it. So as the world tightens its belt and whispers the language of caution, remember, a recession is not the time to ditch your insurance. It is the time to cling to it with the full knowledge of what it protects and what it costs to lose. For more information about your insurance options or to get a free quote, ask CCW Global, where your insurance is always swift, simple, and sorted.